press.
Might help if I turn the microphone on. If I turn the microphone on. If I turn. Okay. If I turn. Okay. I sound crazy. Okay. Let's see how I sound now. Microphone checker. 1, 2, checker. How do I sound now? Do I still sound crazy? Do I still sound distorted? Let's see. Mic check 1, 2, 1, 2. Sounds a little crunchy when I talk loud. Let me turn this down because I be turning it up because some people with old ears, I ain't gonna call no names, be talking about I sound low. But when I turn it up, it be sounding crunchy like. All right, let's test this right here. Mic check 1, 2, 1, 2. Okay, that sounds better. Pull the microphone close. We're gonna keep the microphone close. Like this right here. Mic looks kind of weird coming from the bottom like that, so we're gonna turn it so that it doesn't look so Diddy-ish. No Diddy, no doubt. With it just poking up from the bottom like that. That don't look quite kosher, if you will. Now that looks better. Now you can see that it's actually a microphone. You see Rode, you see the cables and all this right here. It don't just look so, doesn't have such a phallus look to it. Is phallus the word I'm looking for? What's going on? Who up in here, man? I see here to learn the shit up in here. I see Kim up in here. What's going on, Kim? I see Deborah listening in, can't unmute. So what what difference that makes to me? Can't unmute. Who cares? What's going on, Empire Trading? You know what I'm saying? The audacity some people act like, we care if they can't unmute. If y'all got any questions that you want to ask. Oh, wait a minute. Good evening, good evening, good evening, everybody. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, please, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you don't hablo español. See, right back there, right back there, over here, above the lamp over here, right? I was pointing in the wrong direction, above the lamp over there, right? That's just big spot if you don't hablo español. And you are now in tune to another episode of Le Intraday Price Action Recap. Yep, that's what I say right over there. But this episode of the Intraday Price Action Recap is being brought to you by Smart Money Manuscript. I think I have made a final determination or a final decision, if you will, that the Smart Money Manuscript will be launched on my birthday. On my 53rd birthday. The Smart Money Manuscript will be launched on my 53rd birthday. That is August 6th, 2025. That will also be my youngest son's 16th birthday, right? That'll be my youngest son's 16th birthday, and it will be my 53rd birthday, right? Now, what made me decide to drop it on that day? Nothing really. I just said, hey, it's my birthday, and I'm going to drop it on that day. So, August the 6th, the Smart Money Manuscript. We are getting gifts for your birthday. Okay, then I appreciate that. You can send all gifts to my P.O. box. What is my P.O. box? What is my P.O. box? 6223. Is it 6223 or 3226 or 2236? I don't know. I gotta look. And see what I know it's 2 3s and a 6. So it's 2336. I think that's what it is. 2336 is it? Because it's 2 3s and 2 3s equals 6. That's how I be making myself remember it. 2336. See here. Where's that? Do I not have this on my phone anymore? God dog it. Why does it keep doing that? Don't you hate when you're trying to do something on your phone? I don't know. I'll figure it out later. 6623. That's it. P.O. Box 6623, Columbus, Georgia, 31917. That's it. 6623. Right. It's 2 6s and 2 3s make a 6. So 6623. Yeah. You can send all birthday gifts to P.O. Box 6623 Columbus, Georgia, 31917. I think that's what it is. The P.O. boxes have like a funny number, 31917 at the end. Yeah. Yes. So dropping on August the 6th, Smart Money Manuscript. It's your step-by-step guide to actionable financial insight, right? Everything that I've ever covered on this YouTube channel will be in one location and concise bite-sized chunks to help you easily digest it. And it's going to be, in different little segments like I like to do. So you can compartmentalize stuff and then you can figure out how to put it all together like pieces to a puzzle, right? It's going to start at the beginning. It's going to go through everything. If you want to be a long-term investor, if you want to manage your retirement portfolio, if you want to be a buy and hold person, if you want to be a swing trader of stocks, if you want to be a swing trader of options, if you want to be a day trader of stocks, if you want to be a day trader of options, if you want to be a day trader of futures, it's going to everything. And when it comes to day trading, the concepts that I'm going to share is my understanding of the ICT concepts. So if you're not into ICT, right, that portion of it probably won't do you any good, but the rest of it would do some good because it's just going to be education on all things stock market investing and how to prepare for stuff and all of that right there and how to, do it. But the only thing that's going to be specifically ICT is the concepts used to read price action, right? The reading price action is the part that's going to help you with your entries and your exits. That's it. That's a Smart Money Manuscript coming August the 6th. I ain't gonna lie. I was gonna say I probably put together some fancy commercial for it, but I ain't even just gonna lie like that. I ain't gonna lie like I'm gonna put together some fancy commercial for it. Now, did price action today do anything that caught somebody off guard? Did you expect price to do something and it did something else? Right? I ain't always got to ask my wife. I remember stuff. I be having stuff in my phone. Right. So did price do something that caught you off guard today? Did you expect price to do this, but then it did that? All right. If it did, feel free to click on the linkity link that's pinned to the top of the chat and pull up in the Zoom and unmute and be like, hey, Tim, I got a quick question. Right. I was expecting this and price did that. Right. Or, I was just need a little clarification on something, whatever it is. Feel free to click that link and pull up. Again, the chat is over here, right? And the screen I look at is over here, right? So I will not be looking at the chat unless I'm telling you I'm looking at the chat. So if you have something to say, what's up, honey? You pull it up in here, right? Unless you got, if you got something you want to ask or something you want to say, click on that link that's pinned to the top of the chat and ask it. I can't see the Zoom chat. I can't see the YouTube chat because I'm looking this way. Unless I say, hey, put something in the chat and I'm looking, don't bother putting that in the chat. Right? Go ahead and like it. They say when y'all like the videos, YouTube think y'all like it, and then they share it with other people and it help other people get this information on. Now, let's get into it, man. Let's get into it. Today is Monday, June 30th. 2025. 2000. Again, it's June 30th. June 30th. 2025. I heard an echo. I must be sharing the sound on my screen. Let me see if I'm sharing the sound. Yes, I am sharing the sound. Okay, let me unshare the sound. Now, somebody let me know if you hear this echo. Put a one in the chat if you hear echo on YouTube. Do you hear a echo when I talk like this on YouTube? Put a one in the chat if you hear an echo. I don't hear echo on YouTube. There's no echo. Appreciate that, honey. Yeah. Yeah. So that because if I'm sharing the sound and I try to go in and see what it sounds like, it'd be creating an echo. It'd be like so I have to remember to not share the sound when I'm, you know, when I'm sharing my screen inside. Zoom, 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 zoom. I widened out my thing a little bit so now you can see my lamp. This lamp right here is sitting on a stand right next to me. You can see the lamp now. I widened out the screen. I mean the what's the name? I widened it out. It used to be like this, and then I moved it because the lamp used to be a little farther over, right? And then when I widened it out, you can only see a little piece of the lamp like that. So then I scooted the lamp so that you can see the whole lamp when I zoom it out like this right here. Right, so you can see the whole lamp when I zoom it out. All right, let's get to it, man. I'm up there in the way of the candles, so the only way I can get me out of the way is to turn off my camera. So I'll turn off my camera to get me out of the way. Now I'm not blocking anything on the screen. All right, since it's Monday, right, and we have just ended with Monday, we started a new week, and we also just ended a month, and we just also ended a quarter, right? Let's go all the way up. Let's go all the way up, right? We're gonna go up to a quarterly chart, right? This is every 3 months. You be like, you like Tim. Wait a minute, there I can't see anything, but because this is the front month. This is the front month, so the front month only gonna show you so much data, right? If you want to see more data, you got to go to something like the continuous contract. Get out of my way, microphone. You got to come to something like the continuous contract. If you go to NQ1 exclamation point, excuse me, on trading view. Now see if we look at a quarterly chart on there. Hey, look at there. I wonder what that was on there for. What are we looking at? Right now, you can see more data. Right, this is the continuous contract. Right, so looking at the continuous contract on a quarterly chart, right, we can see that price, right, still in the buy program. We extended up, right, took out buy side liquidity, right, we took buy side liquidity out. We retraced back down, right, came down into a discount, traded into that order block right there, traded into a bullish order block, traded into a bullish mitigation block right here, right, traded into a bullish mitigation block on the quarterly chart, and that's about it, except for this reclaimed fair value gap. Right, if we go back a little bit farther, there's a reclaimed fair value gap right there. Okay, so on a quarterly chart, you can still see price being priced. What's going on, Ron Thomas? What's going on, Aranda Rahim? Right, so you can still see price being priced. Right, we got us a little expansion, a retracement, an expansion, a retracement, right? And then inside this quarter here, we also started a new expansion, right? We retraced, and when we opened up, we kept retracing and expanded all in the same quarter. Okay, thus far, that's where we are thus far. So now, what are we looking at on a quarterly basis? All right. What's here? What do you mean on a quarterly basis? I'm glad you asked that question, Tim Rogers. Right. We're starting a new quarter. Right. So since we're starting a new quarter, right, we're looking um over the next 3 months. Right. The first quarter started in January. They gave us January, February, and March. Right. The second quarter started in April. They gave us April, May, and June. Right. Now, the third quarter just started. That's going to give us July, August, and September. Right. So looking by the end of the front month contract that we're on now, right? That's going to be the third Friday of September, right? So by the third Friday of September, if we go over here, that would be 1, 2, 3. So September 19th, right? September 19th will be the end of this contract. And then September 30th will be the end of this quarter, right? So between September 19th and September 30th, right, this contract is going to be coming to an end. And on the 30th, this quarter is going to be coming to an end, right? Like September 19th, that's your next, what they call it, quad witching time. When your quarterly contracts, your monthly contracts, your options contracts, your all these different types of contracts are coming to an end at the same time, September 19th. So during that time, right, the next quarterly candle right here on September 30th is going to be coming to a close, right? So by September 30th, right, you're looking to see how this little sticky little line right there, that's the start of the new candle, right? We're looking to see how it closes in reference, in relation, should I say, to this bullish order block right here. Said all that to say, September 30th, we're looking at how this next candle that's being just started right there, how's it going to close in relations to that bullish order block right there. All right. So from wick to wick, the mean threshold of that bullish order block is 20,965 and 3/4. Right. That's mean threshold. So on a closing basis, right, we want to see how price the next quarterly candle closes in reference to that bullish order block right there. But Tim, why that bullish order block? I'm glad you asked that question, little Timmy Rogers, right? Because we expanded here, right? Came down into a discount of this dealing range, right? Down to this discount PD rate. We pointed out all the discount PD rates that we came down to right there, right? If you get a Fibonacci, run to the low, run to the high. See, we came down to anything below that line right there is discount. We came down into a discount of the overall dealing range, right? Traded to a discount PD array. So now as we move back up and we have taken out this high right there, right? Now the focus is on the latest expansion leg of the dealing range, which is here now, right? And anything we continue up with, right? Anything that we continue up with, that will be the new range you're looking at, right? So since we're not looking for price to come back all the way down here somewhere, right? We want to see how price respects this bullish PD array right here, right? You say, well, Tim, it's sitting right there at equilibrium. And yeah, we got this long lopsided wick. You see this long, whenever we got lopsided wicks like that right there, right? I kind of look at it as two different things. I look at the body to body, right? This is where the bulk of the trading was taking place. So I look here, right? And that there brings us down. If we come to mean threshold of this bullish order block right? That brings us down to a discount from body to body, right? And then I also, if we start getting heavy, then I look at the wick as a separate discount PD array. Why am I looking at that? Because remember, this is the overall dealing range, and that right there is internal sell side liquidity of the overall range. So on a quarterly basis, if price wanted to get super heavy, right, that's internal liquidity for the range. Now, do I think that the market, the NQ futures are going to sell off over 6,000 points from now into September? No, I don't think that, right? But it can. You always want to know, hey, what are my invalidation points? And right now, the only sell side liquidity on the quarterly time frame, right, is here. So if the market wants to come sweep sell side liquidity on the quarterly time frame, it has to come all the way down there. Right. So that's why the focus is here on the bullish order block. All right. The focus is there on the bullish order block, because that's, in my mind, is a more realistic, the close of here, right? That right there is a more realistic heavy pullback. Like if you got a heavy pullback, that's like 8-9% coming back to mean threshold here. That's a nice heavy pullback. If we went into correction territory, right? Let's see, it go like 10 to 12%, right? We're still trading down into the bullish order block, right? Over the next quarter. That's more likely to happen. But dropping, you know, over, going into bear market territory, dropping over 25%, nah, I don't foresee that happening, you know. But like I say, the market can do anything, but I think that would be more of like a black swan type event. All right. On a monthly basis, right? The monthly closed extremely strong, right? Right. The market has been on a tear over the last 3 months, right? You look at the quarterly candle, a tear, a very, very, very strong quarterly candle. We closed all the way at the tippy top, just about that much of a wick on the top. The market has been on a tear over the last 3 months, right? April, crazy rally off of, after taking out sell side, trading down into a bullish order block. May, crazy strong, right? Created an inversion fair value gap on the monthly chart, right? Why is that not touching? I'm trying to figure out why it's not touching. It say fair value gap 3 months, 325. Trying to figure out why that's not touching. Maybe it was, I don't know. I don't know why that wasn't touching. I don't know why that wasn't touching. All right, maybe with the adjustments changed it. Like, because when you be adjusting the continuous charts, the gaps and stuff be moving, except for the ones that's in the front month. Those only ones that don't move, the ones that be in the front month. But like the older ones, they're always moving and shifting. Okay, maybe that's what it is. Um, let's say 325. I don't know why I said 3 months. Let's just say 325. Right. All right. So uh we got an inversion fair value gap, right? That inversion fair value gap is resting inside the leg of this bullish breaker, right? We got a bullish breaker here, right? A low high or low, and now we got a higher high. We got an inversion fair value gap resting inside the leg of that breaker, right? If price start to get heavy, right? It's good if it comes back down to the inversion fair value gap inside the leg of the breaker to give a better entry. That inversion fair value gap coincides with mean threshold of the quarterly order block. Was it the quarterly? Yes, the quarterly order block on the week to week basis, right? So that monthly inversion fair value gap, we got a monthly BISI, right? It's in line with the mean threshold of that order block there. And from the low to the high, right? From the low to the high, if we come down and sweep below the order block into a discount, right? If we come down and sweep below the order block into a discount and then come back up respecting that, right? That would give a discount on the entire um dealing range up from here to here, right? That would give a discount on the entire dealing range up. But looking to see how price trades once it comes back down, because all of this right here is efficiently delivered and we left that area. We traded back down into the order block inside that balanced price range, right? And all of this right here was efficiently delivered. Then we traded down and then we cut through it like butter, right? We was on a tear. Remember the last 3 months, we was on a tear, just sliced through this right here like butter, right? So looking at how price, if price decides to start trading back down, right? We're looking for this to act as support. We're looking for, this balanced price range. Now that we're leaving this area, right? We want to see price treat this as a balanced price range. Right now, when we trade back down, this is the inefficiency that was created leaving that balanced price range, right? These are monthly candles. You see price trade back down. You want to see this area act as support. What do we have here to support price? Mean threshold of a quarterly order block, a bullish fair value gap from May 2025, a bearish fair value gap from March 2025. That gives us a balanced price range right there at that mean threshold, right? So all of this confluence of support right here in this area right there. Want to see it act as support. All right. Weekly time frame. Right. So looking at our weekly time frame, on our weekly time frame, we got us a V shape, right? Whenever you see that V shape like that right there, right? You want to look at the bottom portion of the V. You want to look at that as trapped traders, right? What do I mean? Anybody that got short heat on the breakout of that, right? Anybody got short on the breakout of that, once we offer sell side and buy side to that area there, you don't want to see price coming back down here to allow them to mitigate their losses. You want to see them be trapped, right? So these are trap traders, balanced price range, sell side, buy side delivery, balanced price range. Want to see them be trapped, right? So looking from the low to the high that left that balanced price range, right? That's your low there, right? That candle there to there, that's the low to the high that left that balanced price range, right? If you want to, you could go there from that low to there, right? Because this candle here was still inside that range. That indecision candle was still inside this little V shape there. Then we gapped out of it and went. We gapped and went, right? We gapped and went. Now, if you're in the mindset of gaps got to be filled, right? You can include it and say, hey, if price got heavy and came back down to that liquidity void right there and that volume imbalance, right? You can include it there, you know, on the spectrum of weekly candles. Hey, why crowd was spilled, man? There's just a little difference in price there, but right, price trades back down, right, into a discount of the range. right? Taking out sell side liquidity. We got a bullish order block here, right at equilibrium, right? There's that liquidity void and volume imbalance down here. All right, go back up to the quarterly chart, right? That puts us down below main threshold of that quarterly um, bullish order block, right? So on the weekly time frame, got other things in confluence with that same area there, right? Areas of anticipated support with that same area there. If price got that heavy and wanted to move that far, right? Over the next quarter, over the next few weeks, right? That right there is a pretty deep retracement, like almost 10%, right? Almost 10% retracement. So that's a really, really deep retracement, right? Come here to a daily time frame. Now on the daily time frame, now starting to shape up, right? There's our market maker buy model we have been talking about for a very long time, right? We said that that was our smart money reversal. Once we got this move here, took out that high, we said, okay, that's our low risk buy. And that confirms that that is our smart money reversal, right? And then we started looking at the areas of accumulation and reaccumulation, right? So we moved into our first stage of accumulation, moving to our second stage accumulation, and then based off like the original silver bullet, a lowers the resistance liquidity run right into the buy side liquidity, right? Starting on June 23rd, we don't have a down day, right? Green, 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 green. Just we don't have a down day. Low resistance liquidity run on the daily basis, not intraday. Intraday was ugly, but on daily basis, we don't have any down candles, right? A low resistance run right into that buy side right there, right? Right to that buy side. That was the original silver bullet. When you get long or short off of the second stage reaccumulation or second stage redistribution, whatever I shouldn't say second, final stage of accumulation or final stage of distribution, right? On the market maker buy or market maker sell models, that was the original silver bullet because you're anticipating a low resistance liquidity run into the liquidity, right? And there it is, played out as Michael say, like gangbusters. All right. And we have been talking about that market maker buy model for a really, really long time, right? So just like we always say, if you're on the right side of a market maker buy model, right, you're looking for reasons to buy. Whenever this is buy the dip. This is the buy the dip side of price. Buy the dip. You're not looking to sell the rip over here. You're looking to buy the dip if you're on the right side of a market maker buy model, right? If you're on the right side of a market maker sell model, this is when you're looking to sell the rip, right? Every time it goes to a premium, you're looking to sell the rip. If you're in a market maker sell model, if you're in a market maker buy model, you're looking to buy the dip whenever it goes into a discount of the current dealing range that you're watching. Now, if you're more advanced and you're very nimble, you can trade against the grain and you can sell temporary rips, right? And then take your pound of flesh and get up out of there, right? On an intraday basis, you know. But you don't want to be trying to swing trade against the grain because you're on the right side of the market maker model and price is already predisposed to go to a specific point, a very specific point when it comes to completing that market maker model. Now we're down to the daily time frame and we see we can go back to the front month now. Right. So we're back to the daily time frame and we see that last week was when we got that low resistance liquidity run into the buy side liquidity. right? This was our all-time highs right there that we have been anticipating price drawing into. Just like the dirty dog that the market is, it traded into these all-time highs during the London session, I think, or right before the London. I'm not sure. So this morning session was quite okay, to put it blunt. It was quite okay, right? This afternoon presented some more opportunities uh, right at the end of the day, like the last 10 minutes of the day presented a beautiful short, right? A beautiful short. I took that, right? And it was nice. And my reasoning for taking the short is because um it was the end of the day, and price just meandered all day long, right? It didn't give New York. Let's move to a 60-minute chart, see if we can explain it. Yes, the 60-minute chart gives it a clear, just a clear overview without a whole lot of fluff, right? Let's go to 15-minute chart so we can see the 930. Oh, hey, what's my 930 open? Did I delete my 930 open? I guess I did. You can see my my stuff from the afternoon. This was my afternoon stuff. I took a long and a short this afternoon. Right. I took a long trade and a short trade this afternoon. All right. So this afternoon was much better price action than this morning. Um let's mark out. Okay, so this is 930 here. So this is the 930 open right here. Right. It opened up right at the all-time highs, right? Just above the all-time highs. We talked about this um on the tape reading session today. Let me thicken this up so that we can see this pretty good. Okay, so all right, so we're just gonna we'll look at, so we took out, okay, we took it out during the Asian, right? We reached all-time highs during the Asian right here on the 1050 candle. So during the 1050 to 1110 macro, 1050 p.m. So 2250 to 2310 macro, we took out we've reached all-time highs. We've reached new all-time highs on the NQ. Okay. So as we were coming into 930, right? I spoke to the gang about this. I said, hey, we took out all-time highs prior to 930, right? We took out all-time highs prior to 930. Somebody besides the diamond members and the mentees that was in the live stream with me today, I'm looking at the chat now, right? Somebody explain to me, right? Why was it significant or important to me to note that we took out the all-time highs prior to 930? Why was that an important footnote for me? I'm looking at the chat, right? If you type slow, click on that link that's pinned to the top of the chat and pull up in the Zoom and unmute and talk. Everybody except for Deborah, because Deborah can't unmute. We like we care that she can't unmute, but since she went out of her way to tell us that she can't unmute, everybody except for Deborah, you're welcome to click on the link and pull up and give your reason to why the fact that we took out, that we made new all-time highs prior to 930, why was that a significant footnote to keep in mind? Yes, because it's buy side liquidity, that's one part of it. But why is it Why was it like, because we take out, we see we took out buy side, we took it out again, we took it out again, we took it out again, right? Why why was it important to note that we took it out before 9:30? True enough, it's buy side, but why? What's significant about that, right? Why is there an emphasis being placed on it? Mm? Steve, click on that link and pull up and talk. You type too slow, Steve. Matter of fact, let me do this. You know what? Sometimes people be like, it's making me sign into Zoom. So let me go. I'm gonna go in here. Let me come here. Zoom, right? And then let me update this so it won't be trying to make you sign into Zoom. Because people be like, I want to click on the link, but it's making me sign into Zoom. Uh, wait a minute. It won't let me. It won't let me edit it. It won't let me edit it while I'm live. I thought it let me edit. Oh, wait a minute. You know what? Let me go here. All right. Let me go here. Okay. All right. Settings. All right. Now, only have to take that off. All right. Save. Save. Now, you should be able to anybody should be able to click on it without it trying to make you sign into Zoom. Steve done disappear. Oh, that's you, Steve? Okay, Steve. Steve in there now. Speak to me, Steve. Intermediate high. Now you thinking too deep, Karen. You thinking too deep. And now it ain't got nothing to do with long-term high, intermediate high, none of that. New York. What about New York? Empire Trades. Empire Trades is in the vein now. Empire Trades in the vein. Right. And y'all look at what Empire Trade. Empire Trade said New York. He's in the vein. Right. What about New York? Steve, speak to me, Steve. I see you popped up.
Yeah, I'm right here.
Yeah, talk to me. Right. What about it being buy side liquidity? But what is buy side liquidity? But what's the importance of it being touched before 9:30? And like Steve, I mean, Empire Trades is in the right vein. He said New York, right? What about New York? Y'all know? Okay. New dealing range. Nope. Y'all thinking too deep. Y'all thinking too deep. Okay. The NQ is a US asset, right? Let's do this right here. The NQ is a US asset, right? We're going to chop off everything prior to 9:30, right? We're chopping off everything prior to 9:30, right? And then we're going to hide everything except for the um all-time highs, right? So we're chopping off everything prior to 9:30, right? And now we see this is where we opened right here. So this is our open on the futures day, right? I'm giving you the clue right now, right? This is our open on the futures day right here, right? Midnight is the open true day open. So that's when the algorithm sees it as a new day, right? That's right up there near the all-time highs. Okay. And then we said that we were getting ready to go into our New York Open, right? So we're getting ready to go into our New York Open. All right. So this is where we closed it on Friday, right here. All right. So we closed there on Friday. So this right here is the last time that the New York session traded at this price right here of 22,740 and a quarter. Right. So that is the last price, right, on phones. Be right back on phone. Okay. All right. I'm gonna take that be right back over there and I'm gonna put it right over here with Deborah unmuting. I'm gonna sit that be right back right over here with Deborah unmuting. So this right here is the last price that the algorithm was able to trade during the New York session. Right? This is the new all-time highs. This is the buy side liquidity that we're anticipating price to draw into. Right? This is the last price, 7,000. Let me put a what's the name there? Right? 7,000 to, I don't know if y'all can see those numbers, so I'm gonna type it out. 22,740 and a quarter. All right. So now I can move that new week opening gap. Right. So, and I can move that line. All right. Anybody, and it's clicking in anybody's head yet? It's clicking in anybody's head yet? So that right there is the last price. Last price algo traded during the New York session was, right, this all-time high, right? Draw on liquidity for the NQ. All right. Let me hide that midnight so it don't be blocking what we're trying to see there. Is it clicking for anybody yet? All right. It ain't clicking for nobody yet? So what's the NQ? The NQ is what? The NQ is an index that's traded in what country? Right? The USA. It belongs to the USA. Right? So when is the time of day when this instrument is traded by the country that it belongs to? Right? What's the time of day? Right? Remember, everything. What's the most important thing when it comes to the to algorithmic trading? Time. Right? So what's the time of day when the NQ is traded by the country that it belongs to? Right? What's the time of day? Put that in the chat for me. You can put it in the chat or you can talk. What's the time of day when it's traded? Stock market hours, right? And what is our stock market hours? Yeah, there you go. 9:30 to 4, right? 9:30 to 4, right? Or for people who outside of the US, you know what I'm saying? Y'all use the 24-hour clock. So it'll be 0930 to 1600, right? Those are the New York market trading hours, right? So when did we interact with this high right there, right? We interacted with that high. We said the first time we interacted with it was during the Asian session. Asia, right? The Asian session was the first time we interacted with the draw on liquidity, right? The next time we interacted with the draw on liquidity was during, well, the next and last time, right? So the Asian session engaged with the draw, right? The London session engaged with the draw, right? So who has not had an opportunity, right? Okay, let me say this beforehand. If we're looking for a price to trade into buy side liquidity, what's the preferred way of doing it? We want to see it do what first? What do we want to see it do first before engaging the draw? Manipulate. And when we see it manipulate, we want it to manipulate what? Right? Not lower. We want to manipulate because we want to see it on either way, lower or higher, right? We want to see it manipulate what? Yes, it's yes, opposite. We want to see it manipulate the opposing liquidity, right? We want to think about it, right, in both ways, right? Because a lot of times when you talk, people only think it only work one way, right? You want to see it attack opposing liquidity first before engaging that draw. Okay, so this is the last time that the new 930 to 4 was able to trade down here at 22,740 and a quarter. That was the last price it was able to trade. Now coming into 930, we are right up here at all-time highs. The low of this candle right here is at, the close of this candle here is at 22,871 and 3/4. All-time highs is 22,871 and a quarter. Right. So we are 2 ticks above all-time highs. All right. Now we're getting ready to come into the 930 session. Right. This is the draw on liquidity. Has the New York trading time had an opportunity to engage that buy side liquidity? Right? Yes or no? Has the New York trading time had an opportunity to engage that buy side liquidity? Either type it in the chat or unmute and speak it. Right. From 930 to 4, have we had an opportunity to engage that buy side liquidity? No. Right? Very good. No, we haven't. What do we say? We want to see what's the preferred way of engaging liquidity. We want to see price do what? Remember, price delivers in 2 different ways. It consolidates, expands, retraces, and delivers. And the preferred method is to consolidate, expand, reverse, retrace, and deliver. The reason this is the preferred method is because right here, right? Well, actually right here, there's manipulation going on in this expansion. You're expanding in the opposite direction, and then you reverse and retrace and deliver, right? So you're getting involved during this manipulation over here, right? That's why this is the preferred way of delivery when you're trying to get the best bang for your buck. the best risk to reward on your trades, right? So coming into 930, we said that price has not had an opportunity to engage the draw on liquidity. It has not had an opportunity to take out our anticipatory reactionary point. Yolanda, mute for me. Sound like somebody keeps saying psst in my ear. Psst, psst, psst. It did not have the opportunity to engage with the draw on liquidity. So as we come into 930, right, when you come into a new anything, what do you anticipate going into a new anything? You anticipate what? Some form of what? It's so beautiful when people talk to me. I ain't got to sit here with this awkward silence of waiting on the chat. Manipulation. Very good. Right? You're looking for some form of manipulation going into a new anything, right? You want to see some form of manipulation, right? So when you're looking for a form of manipulation, Rhonda, say it with your chest. Put it back up there. Say it with your chest, Rhonda. Right? You're looking for some form of manipulation. And in this case right here, right, the draw is bullish. So the manipulation you're looking for is attacking sell side, the opposing liquidity. You're looking for and what do we say we want to see price do prior to engaging our draw? Attacking the opposing liquidity. So going into the New York session, we haven't had an opportunity to engage the buy side. So we're anticipating some type of move on sell side and then an opportunity to engage the buy side, right? That long drawn out reason that happens in your head this fast is why it's very significant coming into 930 that we took out this buy side prior to 930, right? Because the algorithm hasn't had an opportunity to engage the buy side liquidity during the 930 session. Now, not only is it important that we engaged it prior to, right? Now, look at what price has done prior to 930. You see this little area of consolidation right here, right? What are we forming here at this all-time high? What is price doing? When price get up here and starts consolidating and starts engineering liquidity, right? Consolidating, engineering liquidity, accumulating, whatever you want to call it. What is it doing right there? Don't think too deep, right? What is it doing right there? It's building what? Building, forming. What is it doing? It's building what? It's forming what? Right? Don't think too deep, right? What is it doing right there? What is it building? What is it forming? What is it creating? Right? Right. No, we already said accumulating. All we give it all these fancy names. It's engineering liquidity. It's accumulating buy stop, sell stops. It's consolidating. It's ranging. Right. It's building liquidity. Right. What is it forming? Just it starts with an S. What is it forming? Right. What is it forming? What is it building? Because we not only are we engaging a high, this happens at every high and low, but we're at all-time highs. So when we look over here, what's not there? It starts with an S, right? What's not up and to the left? What don't we have? Huh? Not stops, not stops. Right? Structure. Very good. We have no structure that to look at up and to the left. So when we come up here and engage with this high, right? Not only at all-time highs, but at any high or low, right? When you get there, you want the algorithm to form structure to give you something to look for algorithmic signatures, right? So once we engage the sell side over here in the Asian, right? We engage the sell side over here in the Asian, right? So we come here, right? We open up, right? Watch this here. We open up here, gap up, right? Take off, come up here. We take out buy side liquidity, right? Finishing off this market maker buy model right there, right? Trade up there, taking out buy side liquidity there, right? So then we come back and we drop down. What do we create here? Relative equal lows. These relative equal lows, when we created these relative equal lows, right, we're trading below these bodies right there. We're taking liquidity. Not only are we trading below these bodies, we're trading below a low right there. We're taking out sell side liquidity. Once we take out that sell side liquidity, what do? We move up and we take out the buy side right there, right? So we take out sell side and then we move to the buy side, right? We're looking for price to trade back up and we took out highs, right? We pull back, take out some form of sell side, right? And then we trade back up into the high, right? Then we engage the all-time highs during the Asian, right? So once we engage the all-time highs during the Asian, let me do this right here to help out everybody that can sessions right there. All right, so we're gonna go London and Asia. So we're gonna go 1, 2. So this right here is gonna be 2000 to what did we say it was? 0230? Was it 230? Was it 230? We said the end of the Asian was? I think it was. Then the London session 0300. And what did we say that was? 11:30 or was it 11 o'clock? 11:30, I think it was. All right. So, right. So we come over here, right? And when we engage all-time highs right there, right? What do we do after we engage that all-time high, right? We come here and we create structure, right? So we come up here, right? We engineer sell side liquidity. We make a low, make another high up there. And then when we go into the London, what do? We come down and we take out that engineered sell side there, right? We didn't take that low. We didn't take that low, right? We got sell side. We got engineered liquidity there. Then we drop down where, boom, down here into this inefficiency below that sell side. We engage sell side, right? And then we allow the London to take out the all-time highs to engage the liquidity, right? We get to our destination, we create the structure, right? And then we engage the opposite side and we take out, we engage the liquidity, the not only just the old all-time high, but the short-term high too that we've created from the prior session, right? So now coming into the New York session here, right? Coming into the New York session here. Come over here. TDA. Let me see. No, it might be one of these here. I'll leave that there. This afternoon. Yes, there you go. Okay. All right. So, all right. This right here is our London low right there. This is a low from the Asian, right? After this balanced price range, right? This is all the way down here. Don't really want to see price come that low because it's deep inside this balanced price range. So we're looking for realistic areas where price can trade to sweep liquidity to give the New York an opportunity to engage the buy side and maybe even the new buy side from the prior session, right? Why? Because we have formed structure. So now coming into the New York session, we have relative equal lows created during the London, right? Early in the London, late in the London, right? This right here is actually during the New York kill zone. So we got relative equal lows created, but this is all during the London session, called the London session ends like over here somewhere, right? And then, matter of fact, I'll go ahead and just put the meat on the bone, right? This is where the London session ends right here. Okay. So here we are. We come into the New York Open. Where's our New York Open? Right there. Right. So we come into the New York Open. When the New York opens, it gaps up slightly above the all-time highs. Right. So it's lost waiting for structure. So it's lost waiting for structure. I can also call that consolidation. Help me out with that, Karen. You might need to jump on the Zoom and unmute because either my reading ain't reading or your typing ain't typing. So it's lost waiting for structure. I can also call that consolidation, correct? What's lost? And yeah, either retype that or unmute and ask that verbally because I can't understand that. Right. So coming into 9:30, we gap up slightly above the draw, our draw from the last time the market traded during the New York session. Right. When we go into a new anything, right? What do we say we want price? What do we anticipate and prefer? No, wrong thing. Let's get the New York on here, 9:30 to 1600. Right. That's the New York session. The pink seat. London overlaps with the New York. Right. We say we anticipate some form of manipulation going into a new anything. So coming into the new session, right, we gap up above the draw, but we barely poke up above it. See that right there? We gap up and barely poke up above it. Anytime we engage liquidity, right, we want to see a run on it. Like this little poke right there, right? You see, we poked above it. Then what do? We pulled back some and we made a deeper push into it, right? Then we came back and took out some sell side and made a deeper push into it, right? And then coming into the New York session, right? We engineer sell side liquidity, right? And then we drop down and we come all the way down and take out that Asian session low, right? We take out the London low, the Asian session low, and we draw down into a discount of our current dealing range, right? We draw down into a discount of our current dealing range, right? Remember what we talked about. What did I say about this V-shaped recovery right here? Anytime you have a V-shaped recovery there, taking out that sell side, remember we was talking about this on what was it? A quarterly or some kind of, it was either quarterly or monthly. It was like a higher time frame chart, right? But don't this look familiar, right? What we got here? We got a low and we got a V shape dipping below that low and coming back up. What do we say about this little V shape area down here? We said these are what? What did we say it was down here inside this V shape right there, running below that low? Trap traders. Very good. So we're looking at the dealing range from when we left that area. So this low right here, because we don't want them to get untrapped. We don't want them to mitigate. So from that low there to that high right there, coming into 930, that's our lowest low and our highest high that we're concerned with, right? What gives us the best opportunity to buy, right? Where do we want to buy? Where do we want to buy? We want to buy where? We buy where and we sell where? Where do we buy? And where do we sell? We buy in a discount, right? We buy in a discount. Y'all see what I'm saying? It's ugly. We buy in a discount and we sell in a premium, right? So we buy in a discount and selling the premium. If this is the lowest low and that's the highest high, that right there is equilibrium. Where is the best buying opportunities? Anywhere below equilibrium, right? What do we have below equilibrium, right? What do we have below equilibrium that we want to see the algorithm engage with before attacking our draw? What's resting below equilibrium, right? I give you a clue. It's this dotted line right here. What's resting below equilibrium that we would like to see the algorithm engage with, manipulate, you know what I'm saying, take out, however you want to call it. What's resting below equilibrium in a discount that we want to see the algorithm engage with before sell side liquidity right here. We got liquidity resting in the discount, right? So that's why that right there, right? And for anybody who like, oh, this is hindsight, gang can vouch for, this was the liquidity that we marked out this morning, saying this is the internal liquidity for our dealing range right there. This is our dealing range. This was our equilibrium. You see it's consolidating there at equilibrium, right? That's our dealing range. That's equilibrium. That's the internal liquidity that the algorithm can trade back down to, right? We don't want to see it getting too heavy, coming all back down here. Okay, so at 9:30, we open up, we drop down, boom, we take out the sell side liquidity, and then we get super ugly, right? From 9:30 up until the London close. Ugly price action. Do absolutely nothing. Not trying to go up, not trying to go down, not trying to do anything, right? Which is perfectly okay. Why is that perfectly okay? Because we have done a lot, right? We have done a lot. So now that we've done all of this, guess what the algorithm is doing? It's engineering liquidity, right? We're engineering liquidity right here. Why? Because we've done a lot, right? And when is it starting to engineer this liquidity, right? Right? When we're going into the London close, we start out in New York and then going into the London close, right? The London close is like right around here, going into like 11:30. I think it's, what is it, 11:30 to 12, or is it 12? I got to go back and check it. Right. I got to go back and check it. I can't remember. Let's go. Time is, all right. We're gonna choose London. Wait a minute. Why is that red? Okay. London. And then we're gonna go here to say London market hours. London market hours are from 8 to 4:30, right? So 8 a.m. is 3 a.m. and then 4:30 would be 11:30, right? So 11:30 is the close, right? I always like to, I don't like to be guessing. If I can't remember, I go get the information, right? So 11:30, right there where we got the close at. So going into the London close, right? We're just engineering liquidity. Okay. Engineering liquidity. Now that we're sitting here engineering liquidity, right? We go into the lunch session. Now let's mark out the afternoon. Let's mark out the afternoon session so that we can, because we know time is very important. All right, so let's put this on here. Let's Sydney, let's do 1330 to 1600. All right. Okay, so this is the afternoon, right? So the purplish part here is the afternoon session. All right. So um let's do this right here. I'm gonna do the New York for just the morning session so we can see it. We can see where the lunch is. All right. So I'm just gonna do this from 9:30 to 12. Do that from 9:30 to 12. Okay. So, and then that little white area there, that's lunch. Right. So that's the lunch session. All right. So this is the morning session. Right. And then as we go into lunch, right, as we go into lunch, right, we take our buy side there, we come down, and then going into the afternoon session, when we go into a new anything, right? Now I'm explaining why. Remember I said I took longs and I took shorts in the afternoon, right? We're going to explain that while we're doing it. Let's see here. All right. That's 15-minute fair value gap over there. That's not really important right now for what I'm talking about. All right. So going into a new anything, what do we anticipate seeing? Right now, remember the draw on liquidity, right, for the overall time frame was this all-time high. See, draw on liquidity for the NQ. All right. We gapped up, touching it, just kissed above it. Right. Going into the New York session, we traded down and took out some sell side liquidity. What sell side liquidity we take out? We took out prior session sell side liquidity during this day after this balanced price range right there, right? So we took out sell side liquidity, right? And then we started engineering liquidity here. Okay. Now that we're engineering liquidity during the morning session, right? We do our thing in lunch and going into the afternoon session, we're going into a new what? Session, right? We're going into a new session. So coming into this new session, we're anticipating price to give some type of manipulation, right? Why? Because giving some type of manipulation is going to give you the better risk to reward setups, right? So as we come into the afternoon, right, we take out the morning's sell side liquidity, right? When we take out the morning set, well, first of all, right, we take out short-term buy side, right? Create a new liquidity pool, right? What is this right here? This right here is when the afternoon starts right here, right? So this is a new session starting right here, right? What's the first 30 minutes of a new session, right? The opening range. All right. So let's mark out this opening range right here. Okay. That's cool. I'll leave this macro windows be that color. So that's going to mess with my mind. So I'm going to pick another color. So coming into the afternoon session, right, we're anticipating some type of manipulation. So inside our opening range, we take out short-term buy side. What does that create? A new liquidity pool here, right? We drop down, take out the sell side from the prior session. So we are manipulating out sell side, right? And we're manipulating out what kind of sell side is that, right? This right here, this sell side right here, this is some short-term sell side, right? But this right here, this sell side is based off of what? What type of liquidity is that? We're manipulating out what? You know, when you was in the army and you used to get those shots in your shoulder, they used to shoot you in your shoulder with that right there. When they shoot you in the shoulder with them TB shots when you was in the military.
Time-based liquidity.
Time-based liquidity. Right. So we're dropping down and we're manipulating out time-based liquidity. Right. So now our opening range has been established. That's the highest high. That's the lowest low. Right. Now that we have our opening range established, right, and we're bullish, right, we've manipulated out the sell side, right? So we got a new dealing range based off of time. We got an algorithmic dealing range in our opening range, right? We don't want to see price slide down. So now that we got our new dealing range, right, we've let price establish a new dealing range. And when we let price establish a new dealing range, right, what do we wait to see once that new dealing range is established? We want to see it engage what? We want to see it engage one side of what? We want to see it engage one side of what? One side of the range. Yes. We want to see it engage either the buy side or sell side, right? Either the buy side or sell side. Now, if you don't have a bias, it matters not what side it trades to first. But if you have a bias, what side do you want to see it engage first? If you got a bias, what side do you want to see it engage first?
The opposite.
Yes, the opposing side. So we're bullish. So we want to see it take the opposing liquidity, right? So coming into the new session, we engage opposing liquidity, right? Coming into the new session, we engage opposing liquidity. Once we establish our dealing range, oh yeah, this is a dirty dog trick, right? It takes out the low again, manipulating in even more people. Why? Because we're at all-time highs. People chomping at the bit to short the all-time highs, right? We trade down, right? And people get short here. They don't get stopped out. And price trades down again. So now they like, oh man, I missed it last time. Let me get in on this. But guess what, buddy? You just got manipulated because you have a new dealing range, right? We're inside a new dealing range. We engage the opposing liquidity, and then look what price does. Nothing could stop me. I'm all the way up. Bust every head you can see. Took out the all-time highs that it never met in the New York. Well, it touched it in a New York session. So creating all-time new highs by trading above that in the New York session. Once we traded above that right there, right, what did we do? right? We traded back down into the order block and then traded up and took out all-time highs, the prior highs that we created in the previous session, right? And then after we took out those all-time highs there, right? Like I said, at the end of the day, I took a short right at the end of the day. Why did I take a short at the end of the day? Because we're going into the close, right? We've reached all-time highs for the New York session, right? And if you're completing a market maker buy model, excuse me, where do you distribute? Where do you distribute your positions when you're completing a market maker buy model? Where do you distribute your positions? You distribute above old highs. So when we trade above this all-time high here, right? This right here is our.
You chopping.
You say I'm chopping. You talking to me or one of your kids?
I'm
Oh, that's your cheap cell phone. All right. That right there. That's a little macro window there. All right. We got a bunch of macros at the end of the day, but that's a little macro window there. So coming into this macro time, right? We make all-time new highs. And then we break back down and trade below that low right there, right? Where do we distribute? Above old highs. So when we trade up, make all-time new highs during a macro, right? And we're getting ready to close the day, right? You're looking for this distribution up there. So right there off that fair value gap, that's your short, right? Back down to any of these lows right here is, you know what I'm saying, low hanging fruit. This was my low here, right? Because I'm not shooting for that low because that's the low we made on the retracement. I'm shooting for those lows there, but that low there, that'll be fine too, right? So that's the short that I took down to that low there at the end of the day. And it was based off the fact that we made our all-time highs, right? Going into the end of the day, and we're completing this market maker buy model that we have been waiting to complete for a very long time. And you're distributing above these old highs, right? And you want to get in that. That's the way you can trade against the grain, right? Why? Because we're bullish, but we are distributing at an anticipatory reactionary point during a very specific time, and you get in on that short to be a part of this distribution, right? You're distributing these long positions into two willing um, buyers, right? To willing buyers right there, right? You're getting short to willing buyers right there. You're selling to willing buyers to go down, right? Because they're long here and they're selling back to willing buyers. And if you want to participate in the short, you're selling to willing buyers to go back, right? They're trying to catch this breakout, but they're getting their head bust because they're trying to get in on a breakout, but they're getting stopped out, right? Hopefully y'all got something out of this, man. Hopefully y'all got something out of this. All right. This is being brought to you by the Smart Money Manuscript. Dropping on August the 6th on the Watt platform. Now, I'm talking about it's going to be dropping on the Watt platform, but then watch the Watt platform can't even support it like I think it's going to be able to support it. It shows that it can support it. It shows that it can support it. So August 6th is the day that it should be dropping the Smart Money Manuscript. Get in where you fit in, man. All right. And all birthday gifts. If you want to send me a birthday gift, P.O. Box 6623. P.O. Box. Wait a minute. P.O. Box. That's an ugly B. P.O. Box 6623, Columbus, Georgia. 331917. If you want to, somebody say they want to send me a gift, that's the P.O. Box right there. Do anybody got anything for me, man? Hope y'all got something out of this, man. Hope y'all got something out of this. I feel like this was pretty informative. What y'all think? Always what? I see it always from like 7:30. Oh, always. Oh, got something out of it. Always. Okay. All right, man. I don't hear nobody asking no questions. I don't see nothing in the chat. We're gonna go ahead and call it there. Tomorrow is July 1st. It's Tuesday. So no tape reading. No tape reading session on tomorrow. Yeah. I'm deleting stuff over here, y'all. Hold on for a second. I was deleting stuff off my chart. All right. Putting this in a new place here. 143. What's that? 143. Okay. Something like that. All right. I was just moving something around on my chart real quick. All right, man. You're welcome. Have a good night, Rhonda. How often are the tape reading sessions? Every Monday, Wednesday, and Friday for the Diamond members. The YouTube mentees, the people that pay through YouTube with the mentee tier is every Monday, and the Diamond members that pay through WAP for the Discord is every Monday, Wednesday, and Friday from 9:30 to 10ish. I mean, from 9 until 10ish. We usually go from like 9 until like 10:15. So it's from like 9 until like 10ish. Monday, Wednesday, and Friday for the Diamond members in Discord, and Monday, every Monday for the YouTube mentees, the one that pay through the YouTube membership instead of the WAP. That's it, man. I appreciate y'all. If life don't start lifing, we'll be back tomorrow night at 6 for the price action recap. But if life does start lifing, hey man, we do the same thing every day. We look for the algorithmic signatures and we strike when the iron's hot, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. They ain't nothing but Big Spider if you don't hablo Espanol. Right? Don't get nervous. That's just Big Spider. Right? Y'all be safe out here in these trading streets, man. Gone.